Welcome to the Tradier Rundown. I am Jim Uriel. That's Bob Iacchino. Together, the two of us, we are the hosts of Tradier's The Trader's Edge that airs live every Wednesday, 3 p.m. Chicago time, 4 p.m. Eastern, and then is repeated on YouTube. Please join us for that. Bobby, how are you?
Good. How you doing, bud?
Good. So today we are to talk about where potential, this is an interesting topic to me because when NVIDIA turned around last week, so to me, it's like, where's the rotation going to happen? And so far, the rotation's happened into Amazon and Apple, which I think is relatively healthy, despite the fact that I think the correction is afoot. Where do you think the value is in equity markets this next month, next 6 months? You take your time frame.
Well, if there is value, it's still in tech. I mean, I don't know where, if you were talking to somebody who was in their 20s, and you do because you have daughters, what do you tell them to do? I mean, it's not necessarily that it's value. It's this long term. Where are you going to not regret putting money? Now, short term, it's a lot different. I think about processes of absorbing and building the infrastructure around chips as opposed to chips. Well, the chip technology themselves is obviously going to continue to grow, and AI may not be overvalued. That trade went fast and high, man. And so I like to look at stocks like ASML, ARM, and then Micron, who has earnings after the close today. I heard a good quote today, you know, AI needs a lot of data. And where do you store data? At Micron. So people are starting to look at the story that surrounds AI as opposed to AI itself. So I wouldn't mind seeing a drop in the chips. People are still going to need the chips, and then you start investing in the infrastructure around it.
So when you look at tech, I noticed you said tech, but then you quickly honed in on the AI piece of the puzzle, which I think is interesting. Outside of that's the big growth story, and that's been dubbed where we're going. Outside of that, a lot of tech growth in general depends on low interest rates because of that discounting future cash flow mechanism that every Wall Street analyst uses. So outside of AI and chips in general, do you still like tech, or is that just all tech to you at this point in time?
It's just all tech to me. Now, you know what? One thing with, like, when you talk about interest rates, we are not talking about tightening versus pausing the tightening or easing. We're talking about easing versus no easing.
Right.
Now, tech has rallied with no tightening and no easing. So if they start to ease, tech can rally. If they don't start to ease,
it's been fine.
What does tech do? Yeah, I mean, I just looked at a report from FactSet where analysts are expecting the S&P, which is 33% tech, right?
Yeah.
To post double-digit earnings growth next year. It's been a while since we've had 2 consecutive quarters of double-digit earnings growth. So when you look at it from that perspective, barring a sort of a deflationary or a stagflationary shock, which we could get. I mean, if we're wrong that the economy is going to continue to grow, then FactSet is wrong, or the analysts they're reporting on, I should say, it's not FactSet's reporting, then they're wrong about double-digit earnings. So we're going to be talking to somebody today that knows a lot about that.
No doubt about it. Okay, one other question, but it's in 2 parts. Okay, Kevin Green, who we both know from Schwab, who've had a show, I was speaking to him yesterday, and I was pro-oil. And I believe that the growth story was in oil was good. And he's like, but what's going to take it from 85 if, pointing at me, you believe recession's coming, which I do? How do I reconcile? How am I supposed to reconcile that?
So there's a couple of things going on with oil. Number one, Brazil is likely to kind of thwart OPEC and OPEC Plus's plans to manage price. Their production is not only recovering, but it's growing quickly. And some of the projects to make it continue to grow are really ramping up. But they also have an invite to join OPEC. So that's medium term. But in the short term, I'm with you in terms of, because crude oil is not recession proof, but it is supply and demand first.
Right.
And if the supply tightens up and the demand increases, which it may not if we're heading toward a recession, which I don't think we are, then you're still looking at a market that's likely to be undersupplied in the medium term as U.S. production starts to taper off.
In 10 seconds, can you describe if you like banks or don't like banks?
I don't love banks. I think with interest rates probably headed lower, that trade's probably a little long in the tooth.
Got it. Okay, this is Tradier's Rundown. I'm Jim Muriel. That's Bob Iacino. Please join us for our show, Tradier's The Trader's Edge, 3 p.m. Wednesdays live in the Tradier Hub. That's Central Time, 4 p.m. Eastern Time. Thank you.
Thanks for watching. Please be sure to take some time to read the disclaimer. Thank you.